What's going on, traders? It's not going to be a long video. I'm just going to give you guys an update on my thoughts when it comes to the overall market. And so when we're talking about today, we didn't really get much action, right? We just consolidated. We traded within a range. I imagine it was pretty frustrating for a lot of traders unless you're a scalper and you're trading within this range between about 599, 598, and lowest you're looking at is about 594. So pretty boring day. It's pretty obvious that the market is waiting on news in regards to tariffs. So we'll have to wait and see what happens. But what's interesting here is when we're looking at the SPY is that we're having a hard time getting above this area right here, right where these guys are. You guys see it clear as day, this arrow right here. This is where we're having a hard time breaking through. So I imagine that in order to really break towards the upside, obviously we need to get above at least 598 and actually hold, but not only 598, we'll need to get above 600, and then chances are we're heading towards 602 minimum. I'm looking at about 604. If we're being optimistic, I would say maybe 610, 613, your previous highs, and then we'll see what happens from there. But for now, not much to go off of. Now, what I will say is this, right? We're looking at this rising wedge pattern. If we zoom out, we're looking at this rising wedge pattern. And so the question is, well, what happens, or at least for myself, what happens if we break below this rising wedge pattern? And so something we've been seeing over and over and over again when it comes to this market is that even when you break below patterns, bulls step in, right? So for example, let's say we break below here, we head towards 592, bulls probably will step in, and we're back to where we started all over again. And so I don't think 592 or a break below this rising wedge to 592 is a convincing move. I don't think that's going to be the move that I'm looking for in regards to loading up puts. What I'm looking for here is 585. I think this is an obvious play here. I think it's very obvious on why I'm looking at 585. And in case you don't get it, in case you're not catching on, I mean, look in this range here. A lot of consolidation, a lot of bulls in this area. I mean, all within this range here, guys. You see it here. Back and forth. Every time you hit 585, 584, give or take, you bounce back towards the upside. I apologize, it's raining here, so yeah, bear with me. But ultimately, that's the level that I'm looking for in order to convince me that bears are taking control. But for now, even if we break below this rising wedge pattern, let's say we hit 592, I won't be convinced just yet until we manage to get to this area down here at around 585, possibly break, retest, boom, we're heading towards this gap fill, and then chances are we're heading towards 570s. So that's what I would be looking for in regards to downside. I think I made it clear when it comes to upside, but in case I didn't, you just want to see us get above these guys right here. Obviously, you want to pay attention to news, tariff news, unemployment data, whatever the case may be, whatever the market decides to react to, because we just don't know what the market takes serious anymore, right? We don't know what's good news. We don't know what's bad news. We don't know what news is going to stick. We don't know what news is not going to stick. So it's just a matter of paying attention to news and just waiting for us to break above this range here. I would just say wait for a break above 600, break and hold above 600, and then we'll see what happens from there. Chances are you're heading 602, 604, maybe previous highs. So that's what I'm looking at when it comes to the SPY. When we look at the triple Qs, pretty much the same thing when you're looking at the SPY right now. What's interesting here is that you're kind of getting weak. All right, you're kind of getting weak. I would take that with a grain of salt, just given the conditions of the market. I mean, but it looks like we're losing strength, right? And you can see it here. So just like we showed on the SPY, or just like I showed on the SPY, right? We're trying to get above these guys right here at around 530. We'll say 531 to be safe. But right now, you're seeing bulls get a little bit weak here. You're seeing bears start to trickle in. I tell you guys all the time, pay attention to the candles. The candles tell you everything you need to know. So you're starting to see some type of rollover effect. Now, it's not set in stone or anything. So what I would be looking for if I was a bear, right? I would be looking for a break below 525, but ultimately that would not convince me. I would want to see a break back below 522. Okay, 522, we talk about this level all the time. This is your key level. So if you're doing the math here, 585, 522, 585 on the SPY, 522 on the triple Qs, those are your key levels. So even if we head back down here towards 525, right? Won't be convinced just yet. I think we need a more significant move to convince us that bears are taking control. Now, in order for us to believe that bulls are still in control, obviously you want to break above 531, 530, right where these guys are, clear as day. And then from there, you're probably going to head towards 533. Highs you're looking at as previous highs, 538, 538, 540, more or less, maybe even all-time highs. But when you zoom out, as you guys can see, I mean, you're just pumping. You got tons of gaps towards the downside, and you're just really pumping. And it's clear as day that semiconductors are pretty much carrying the market, right? And so that's my thoughts on triple Qs. Let's get into certain stocks that we're looking at. So for now, Apple. So Apple's crazy, right? So today we saw Apple try to break towards the upside, right? And now after hours, it's kind of breaking down. Now it's not a convincing breakdown or anything like that. You do have somewhat of a symmetrical triangle here. So it's not like Apple is heading to the pits of the earth or anything like that just yet, but you are trading within this range. You're trading within this symmetrical triangle. But today we saw Apple try to break out. Your key level here was 203.5. It could not hold above that key level, and ultimately you saw these guys right here step in. Now obviously Apple got news, but these guys right here, they were obviously waiting on news, right? They were waiting on news, and I tell you guys all the time, be careful, look to the left. Bears are going to be looking for any type of bad news. Bulls got trapped here. You saw a breakout towards the upside. Things were looking good. I was waiting for that 2-hour close above here. Did not get it. Bad news came in at a really convenient time. I mean, Apple's breaking out and suddenly bad news just hits at the most convenient, perfect time. I thought that was insane. And then Apple tanks back towards the downside. Now, this doesn't mean that Apple's going to continue towards the downside just yet. Obviously, you want to see some key levels get broken here. So 196 is the main level of all levels that I'm looking at. Sure, Apple breaks below 200. That's worrisome. But ultimately, in order for me to be convinced that bears are taking control, again, I want to see a break below 196. You could say 198 is fine as well, but 196 is what I'm looking at here for me to be convinced that we're heading a little bit lower, probably towards the low 190s when it comes to Apple. So nothing really to worry about here when it comes to, I guess, upside just yet. And if you're looking to trade Apple, I would just wait for a breakout here with convincing volume. So I look at the 2-hour time frame. You guys know that I base my entries off that. Had I jumped in prior to a 2-hour close, would have got clapped, right? So ultimately, break, retest. Your measured move here will probably be towards that gap fill at 220. Let's actually zoom out here and see where that gap fill is, right? I believe it's at 220, 215, something like that. Yeah, so about 220, 221. Now, Apple does have an event coming up. You do have this potential triple bottom here. You can argue that it's just a double bottom. Either one is fine with me, but you have a bottom here, another bottom here, and then your neckline will be all the way up here at around 211, well, actually, no, I'm wrong. All right, so at around 215. After that, I mean, you can wait on that to maybe get a few points in, but ultimately, yeah, that's what you're looking at. You'll be getting a move towards 220. So Apple, kind of annoying. All right, really, really annoying. This thing is still tanking after hours. Did they get bad news or something? Apple loses bid to pause App Store reform order in Epic Games case. Wow. All right, so that's not good. All right, so that's not really good. But again, when it comes to this current market, it's just bad news is good news. Okay, bad news is good news. Good news is good news. All right, so take that with a grain of salt. We'll need to see a break below some key levels in order for us to be really convinced about Apple and see some more downside here. And so that leads me to talk about Nvidia, right? Because one thing we keep talking about when it comes to Nvidia is a hold above 140. And we are holding above 140, but that doesn't necessarily mean anything when it comes to Nvidia. Now, I'm not saying this time is going to be the same as any other time, but when we look in the past, Nvidia has a terrible time holding above 140 here, right? You can argue that this is a reversal pattern or a a dragonfly pattern. I could be wrong. Feel free to correct me if I'm wrong there. I don't know every single pattern on the planet, but regardless, every time Nvidia gets above 140, we go over this all the time. It stays up there for a good week or so, trades back below 140, stays up there for a few days, trades back below. You guys get the idea by now, all right? I'm hoping you do. If you're new to the channel, then just zoom out, look to the left. Boom, you get the idea. All right, so maybe this time is different, very much possible, but obviously Nvidia is going to need some very, very immaculate news, or semiconductors in general are going to need some very immaculate news for us to really break higher. I imagine that semiconductors are waiting on Broadcom earnings. That's my best guess. AVGO. So that's what I'm imagining that's going to happen. Maybe that's enough to really make things go higher. I wouldn't count on it, but me personally, I think that's what Nvidia, everything else is waiting on. Broadcom probably will have to just blow things out the park. I believe it's the #1 holding for a lot of semiconductor ETFs, so we'll see. But Nvidia, it looks great. I mean, it doesn't look bad. I guess great is an over exaggeration. It doesn't look bad. It looks good for now. Okay, above 140, pretty good. You're kind of sitting pretty here. Not really much else to go over. You just got to be careful with these guys, these bears, these cocaine bears, these drilling at the mouth psychopaths here, here. I mean, they're all over the place. All right. So they're just like we saw with Apple, right? I told you guys when we just looked at Apple, I told you guys that those bears within that range, they were waiting for bad news, right? So here, when Apple attempted a breakout, let's go to the 2 hour. When Apple attempted a breakout, we ended up getting bad news when it comes to Apple and Baba. And boom, what happens? You pretty much get a fake out. Bulls get trapped. Apple tanks towards the downside. And so again, you could be looking at the same scenario when it comes to Nvidia. You could be. All right. I'm not saying it's going to happen. I don't know what's going to happen in the future. I don't know what news is going to conveniently pop out of the sky. I don't know. What I'm saying is that it's looking very similar. Okay. It's looking very similar to what we just saw with Apple. Again, we could be wrong here. We'll just have to wait and see. And this is looking very reversal pattern-ish. Okay. I know that's not a word because some of you are very, very big on semantics and things like that. But this is looking very pattern-ish. All right, so we'll see. Okay, we will see when it comes to Nvidia. Ultimately, your key level here when it comes to Nvidia, obviously 140. We'll just say 139 to be safe. From there, you're looking at about 137. 135 is your psych level. 133, 132, and then down here is your supply and demand zone between 127 and 130. So that's what we're looking at for Nvidia. IWM. So Russell's kind of playing games here, right? We got this massive inverse head and shoulders pattern. Here you got your shoulder here, head here, another shoulder here. It broke above this trend. Okay, it broke above this trend. That's a great sign. But again, what I'm personally waiting on is not only a break above this trend, because this is how you get trapped, right? This is if you're bullish, right? This is how you get trapped. You're like, oh, it broke this trend. That means we're heading to the moon, right? But then you can front run this, right? You could front run this and you might get lucky, right? If you front run it down here, then you're sitting good, right? In my opinion. But what you're looking at here is a break retest of 211, 210, and then head higher, right? But right here, easy way to get trapped. Bears can step in at any given moment. These guys right here, guys, right here. All right, so let's mark this out. All right, so right here, these guys right here can step in at any given moment. Maybe we get bad news tomorrow, Friday. I don't know. You know, we got tariff news Friday coming in as well. I think it's in regards to China. And, you know, boom, you do one of these. All right, you do one of these moves and you're heading much lower to probably 188. All right, but obviously respect your key levels. Your main level here of all levels that will convince me that bears are completely in control here is a break below 199. We're pretty far off from that. So that would pretty much invalidate this pattern, in my opinion. We break below 199 on the IWM because you see right here, let's zoom in, you see right here, bulls are extremely present in this area. You stop these guys out of their position, chances are IWM, there's no doubt in my mind, IWM will head towards that 188 gap fill. We'll see. All right, so that's what I'm looking at for the Russell. But again, if you're going to jump the gun, fine, I guess. It makes sense in my opinion because you're trading this really beautiful pattern and you broke above this trend here on a daily time frame. So I can understand why you would take a really low risk trade here to the upside, but ultimately what you're looking for, if you really want to, you know, if you want to wait, sit on cash, be patient, boom, break, retest to the moon, Jupiter, heaven, God, all that fun stuff. All right, so that's what we're looking at when it comes to the Russell. Real quick, so Bitcoin, I know I said this was going to be a short video. Clearly I lied. But when it comes to Bitcoin, I got a lot going on here. Just bear with me. All right. So when it comes to Bitcoin, let's just erase everything, right? Let's just erase everything. So below 107K, as long as Bitcoin stays below 107K, really hard to be bullish on this thing. But obviously, I mean, you're above 100K. So, you know, I would say I'm neutral on Bitcoin. I'm not super bullish, but I'm not really bearish either, right? It's just more so neutral, right? So possible bear flag here, possible, okay? Maybe. We're seeing Bitcoin just not react to the upside that the market is giving. We know that Bitcoin is somewhat of a leading indicator, but let's say we are going to head back towards the upside, possible move towards about 107K, and then do this all over again. We'll see. We will see. But I mean, you have your flagpole here. Right, so you have your flagpole here, and boom. Okay, so pretty clean, pretty clean. So VIX, right? VIX getting in that territory I was talking about between 17 and 17.5. I mean, you see it here, right? You bounced here, right? Maybe if I go further back, you know, you did your roller coaster dance here, you rejected here. This was like anything in 2024, I won't take serious with the VIX because the VIX changes its rules every year, all right? We talked about this before. Like, so for example, 2024, anytime the VIX got between 13 and I would say 15, it pumps back towards the upside. This year, since the beginning of 2025, wait, 2024, I'm sorry. So here, anytime the VIX got between 13 and about 15, you saw a pump towards the upside, right? Here you had it as low as about 12.88, you pump towards the upside. And then the beginning of this year, VIX seemed to change its rules. So now it seems like 14 and 15 is the area here. And this is when I was talking about when I said when I pretty much said that I made a video about a top being near, and this is what happened, right? This move right here happened, right? And so now this year, it seems like anytime the VIX gets between 14 and 15, you pump towards the upside, right? So it is very much possible that we can head much lower, but I would just be careful in this area right here, between 17 and 17.5. We can say 16.8 as well, but as you guys can see here, we pretty much respected this area. Not too great, but we respected this area. You see that bulls are very much present here in this range right here. Bulls are very much present here as well. So we'll have to wait and see. But yeah, VIX, be careful in this area, right? Be very much careful in this range right here. At any given moment, VIX could pop towards the upside, right? So that's what we're looking at when it comes to the VIX. And that's pretty much it. Last but not least, let's go over gold real quick. I think gold's heading towards all-time highs at this point. I really can't see a reason why it would tank from here. The gold seems to be doing inverse of the market as well, so that's kind of a telling sign. If gold is going to head towards all-time highs, and we know that gold is somewhat of a safe haven for a market crash or whatever you want to call it, yeah, you're possibly looking at all-time highs at this point. And if we get all-time highs on gold, I don't think the market is going to follow along with gold. I could be wrong here, but you have this beautiful bull flag here. I mean, you can't deny this, guys. You can't deny this at all. I mean, look at this thing. Clean. I mean, not the cleanest, you kind of went below it, but ultimately clean. All right, very clean in my opinion. You're talking about a measured move here. You're talking about a measured move all the way to basically 4,000. All right, so I told you guys before, right? I told you guys before, one of my targets for gold is about 3,600. That's the lowest I'm looking at minimum, but this thing can really take off. So if this bull flag plays out, all right, if this bull flag plays out, it's a lot of money on the table. All right, I've been making a lot of money off this thing, trading it to the upside. I'm looking forward to some crazy moves here. We'll see. All right, we will see. Worst case scenario, I mean, you go back below. Okay, here's what I'll say. All right, so I don't want anyone jumping the gun. As long as gold stays below 33.26, I don't have it marked for some reason, but 33.26, you're bullish. Like, you're extremely bullish. All right, but obviously we're pretty far from that. So 33.50 is obviously another key level here. So where is it? Oh, I already have it marked. I'm sorry. 33.50 is another key level here. You see that we're pretty much bouncing here. It's not a convincing bounce just yet, but you broke above, you retested, you're somewhat bouncing back towards the upside, right? So 33.50 is another key level here. Next level I'm looking at is about 34.30. Okay, 34.30. We can push it towards 34.50, but gold, have nothing bad to say about it. Looks beautiful, very clean bull flag. That's all I have for it. Quant data, it's been a while since I went over quant data. I'm just now realizing that, so I do apologize. I don't know why I'm apologizing. I don't have to go over this. With quant data, nothing too crazy today. What's interesting is that you do have these IWM 200 puts that came in. Right here for July 3rd, they were at the ask at 1.09 million premium, so that's pretty interesting. The quantity is 5K, so that's an interesting play right there, right? And then I want to see if there was something else. I think there was like SPY 585 calls. You have these Carvana calls that keep coming in. Carvana seems to be a hedge against the market lately. Maybe I'm wrong there. Maybe I haven't paid attention to it enough to really be sure about that, but we'll see. But nothing too crazy today, all right? Nothing really crazy today, in my opinion. You saw a lot of Apple calls come in on Cheddar Flow, things like that. But ultimately, when I say Apple calls, I mean like in the money 200 strike calls. So nothing crazy as far as like 220, 215 calls. But feel free to screenshot this. Do what you need to do with this information. But yeah, it's pretty much why I haven't been going over quant data. Hedge funds don't seem too interested in this upside right now. I'm pretty sure they're still waiting on another drop in order to enter this rally. We'll see. But other than that, that's really all I have. Until the next video, traders, let me know what you think in the comments below. I will keep comments open for about a good 5 minutes. And yeah, let me know what you guys think in the comments below. Until the next video, traders, have a good one.